Welcome and hello. Welcome to the Go Plan video library that includes Greenleaf Financial Fitness Series and other financial professional series involved with personal financial wellness. This series, along with other videos, will be posted on our Go Plan YouTube channel, websites, and other social media outlets. My name is Jim Hiles, and as your host, I think it's important to highlight what financial wellness is and how tools like Go Plan 101 can help Americans achieve their goals and wishes. So, what is financial wellness? It is defined as the overall financial health of an individual. What it does for you is probably most important. It helps you increase understanding all things related to money. It can also help decrease stress, help you make better decisions, and perhaps most importantly, keep you on track as things change in the future. What's Go Plan 101? Well, Go Plan 101 combines web technology and educational content with behavioral change solutions, free software, and a huge resource center full of focused responses. Translation? Simple. Go Plan 101 is a cool site that helps people deal with their money issues so they can do what they want to do. And you also have the capability on our site to talk to a coach or go right to the resource. At the end of the day, financial wellness is only as good as the actions taken. So sit back, relax, and enjoy the video.
Good afternoon, and welcome to the Greenleaf Financial Fitness Series, 20 minutes to a healthier and wealthier you. Today's September 11th, 2018, and we're going to be talking about long-term care insurance. What is it and who might need it? Just a little quick introduction, as we always do. Up top, sorry about that. Brief introductions. Some of the people that make these blockbuster productions happen. Up top, we have Jamie Greenleaf. Jamie is a partner and lead advisor with Cafaro Greenleaf. Today, we have our guest with us, Joe Savastano. Joe is a long-term care specialist with BSMG. With me here, my partner, Jim Hiles. Jim is the managing partner with First Capital Advisors Group. First Capital, along with Cafaro Greenleaf, is the brain power behind Greenleaf Financial. And I'm Jim D., financial advisor with Greenleaf Financial and your host and moderator for today. So let's get into it. Long-term care. What is it? Make sure I'm on the right slide here. So what is it? This is, according to the National Institute of Health, National Institute on Aging, long-term care basically involves healthcare services for either a long or short period of time. It involves helping people when they can no longer perform their everyday activities on their own. It's oftentimes provided by a variety of caregivers, different people, depending on the needs of the individual. Most care is provided at home, and most care is also provided by family members on an unpaid basis and friends oftentimes. It can also be given, of course, in a nursing home or adult daycare center. So, Jim Hiles, you're up. Why don't you tell us a little bit about what qualifies people for benefits?
Sure, and hello everyone, this is Jim Hiles, and happy 9/11. Hearts and minds go out to the people at 9/11, but let's go ahead and get started with long-term care. Long-term care, when we talk about long-term care, we're talking about you need long-term care because you qualify for a benefit. And generally what you're looking for, long-term care means you can't do generally 2 of 6 activities of daily living, something called an ADL. So if you're having difficulty eating, bathing, dressing, transferring, toileting, or continence, then that basically qualifies you for help. And it's 2 out of these 6. You'll hear these terms of this jargon in the long-term care business. ADL is probably one of the most important ones to remember because those are your qualifiers. And the second one on here, which is automatic, is cognitive impairment. So let's talk about some odds here. So what are the odds for long-term care? Essentially for individuals older than age 65. So we're looking at the retirement group and beyond. 70% of that group, 7 out of 10, will need long-term care at some point. So when you look at the odds of this happening and where you are today, it's kind of like a pretty big percentage of us, if you look around the room, 7 out of 10 are going to need long-term care support. And when you look at the additional findings of this, it's not just what most people think. I need nursing home care. Well, yes, 40% of the individuals who are involved with long-term care will use it for nursing home care. But 60% of the individuals will not use it for nursing home care. They're going to use it for at-home care or some other version of long-term care facility. Here's another question we get is, well, how long will I need this on average? So if you qualify for long-term care and you qualify for those ADLs, the average is 2.2 years for men and 3.7 years for women. Now, this doesn't necessarily mean that it's long-term care and then you're going off to some other greater place. This means that on average 2.2 years you're going to need care. Some people do pass on, some people do recover. However, the majority is generally they're passing on at that point. Keep in mind here on this slide, the women have a longer longevity, and that's one of the reasons why we're expecting, or the average is 3.7 years for women.
Got it. I think that nursing home topic that you brought up was a common misconception about long-term care. So here I'm going to bring in Joe Savastano. Joe, welcome. Thanks for being here with us today.
Yeah, thanks so much for having me. So, I mean, here you have, as of a few years ago, and obviously the costs are only going up, they're not going down, but as of 2015, these were the costs of, Jim mentioned that nursing home care. So semi-private room, you're talking about, $80,000 a year, and a private room, $91,250. So, no small shakes, obviously. Home care, is some sort of percentage of that. And an assisted living facility, where you're, independent, but there's care there if you need it, is typically, somewhere in between home care and nursing home care. But these numbers are only on the rise, as you'll see here on this next slide, right? So if you extrapolate kind of the current rates of inflation, so 2.4% roughly, 10 years from when this was done 3 years ago. So 7 years from now in 2025, you're talking about, $116,000 a year. And in 2035, almost $150,000 a year. And, it's important to think about when you talk about the median income of these people that'll probably need care being about a third of that.
Right.
Right. In current dollars. So.
And that's a 2.4% rate, right?
Yeah, of inflation. Yep, exactly.
Isn't it running at a higher rate of inflation than that right now?
Yeah, I think that's a really conservative estimate. That was obviously taken off of a more conservative study, but people should plan for just in the last 10 years. In our experiences and the numbers we run, we talk about the cost of care increasing at a rate of about 4%, and that's only expected to go up. So in future years to be more than 4% when you think about the advances in technology that are coming along and sort of the devices and equipment used to keep people alive, longer and in some cases, frankly, past their normal expiration date as far as the current life expectancy.
Right. So this slide here is what then? I'm projecting out there to 2035, and this is what my expected cost will be.
Yeah, total cost. So you're based on that, 2035, almost $150,000 a year. You're saying men, at 2.2 years will be, $322,000 total cost. Women, $540,000. And then you always hear the horror story. This is actually my grandfather's exact story. 8 years with Alzheimer's in a nursing home was $1.2 million. So you can imagine that was quite crippling to my family's financial fitness. So one of the reasons I'm passionate about long-term care today.
Yeah, that's definitely a tough situation. So let's look at some of the trends that we're seeing in long-term care. Sorry about that. Some of the trends that can impact long-term care costs. I have enough time on the right. There we go. So obviously baby boomers, everybody knows that they're the bubble in the hose of the population in our country, and that number of people, that's just a simple supply and demand equation there, I suppose, right? I mean, Medical technology.
Exactly.
We're,
We talk about medical technology increasing life expectancy, but there's a cost that's going right hand in hand with that, and that's going to affect us in long-term care. I mean, we looked at before. I think the average when you get to age 65, your longevity actually extends. So you could be looking at longevity 90, 92, 95, even 100 is not that far out of range. You might be needing long-term care for a long period of time, maybe even longer than what the averages are today.
as far as family dynamics, Joe, what do you see as far as, do you see anything more often than not? Who's providing the care?
Yeah, so I mean, people want to stay at home as long as possible, and this goes back to what you were saying with, only 40% of claims really play out in a nursing home. So people want to stay at home as long as possible, and you can pay for professional care in the home. But a lot of people are saying, oh, well, my family will take care of me, and that'll solve the long-term care problem, in my financial plan, the fact that I don't have any insurance. And that's just not true, because that now falls on your family member, who likely is going to have to quit their job or go part-time, to care for you full-time, and it also impacts their family dynamics as well. So there's kind of a hidden cost in there that people don't consider.
Got it. And then, of course, there's questions about government programs. We'll talk about them a little bit, see, who's available, who qualifies, and so on.
Sure.
So, when we look at this, it's an issue. It's a dilemma. It's not necessarily an easy, you do this, you get a solution. You kind of have to look at what your options are. Most people are self-funding right now. What does that mean? That means that they are taking on the risks themselves, and they're spending down their capital, or they're spending down things like their retirement plan or annuities, or in some cases, we've seen the situation actually turn to having to sell a house, move to a smaller house, having to leverage or take a home equity line out on a piece of property. So this can be something you think, oh, it's not such a big deal, it won't harm, the assets are there, but you do have to look at from a financial standpoint of what assets might be impacted in case of long-term care. So somebody's going to have to absorb those costs somewhere.
Right. So, Joe, why don't you talk to us a little bit about the government programs that people oftentimes cite when they think, I'm covered?
Sure. Yeah. So, I mean, Medicare and Medicaid, put quite simply, Medicare does not cover you. So, and these, by the way, we're going to talk about Medicaid as well, but these are as the programs currently sit. So, Medicare does not cover a long-term care situation. As you can see, only provides rehabilitative care. Medicaid will cover you if you're completely indigent, and I'll get into that in a second. But that was only in its current state, right? So we see benefits, being stripped away, by the government, and, we need to make room in the budget to cover the debt. So we're stripping away programs like Medicaid. So I really don't know how this is going to look in 20 to 30 years when, a lot of us will be thinking about a long-term care need. But in, in my state, in Rhode Island, and in New Jersey, there's, a minimum that you have to draw your assets down to before the government will start to cover you. So here, you in Rhode Island, you can have $14,000 to your name before you, in order to qualify for government benefits. And then, so if you have a $500,000 estate, you have to spend down all your own money before government assistance will kick in. And then, I've been to some Medicaid qualifying facilities. So where the government puts you when you're on their dime. And frankly, it's scary. It's not, up to even the minimum standards of what a facility should be, in my opinion, and a facility that you can afford, if you have the assets, or if you have private insurance.
Sure. I can imagine. So, what are some other you want to cover some of the other misconceptions that we see out there?
Definitely. Yeah. So, I mean, this is some things that I hear, daily, as far as like objections to why someone should think about long-term care, and my family will take care of me, to say nothing of the impact that I just spoke about, of the impact that it's having on your family if they have to quit their job, or, their own family dynamics. But also, if you think about, I was in a meeting with another, long-term care expert, and someone said that, their wife would take care of them. And she was like, okay, you lay on the ground and go limp, and then you will have your wife try to pick you up off of the floor. And that's literally like what it is. Can someone handle your weight and, help you get in and out of bed and help dress you, when, you're a bigger person. I talked about my grandfather and his experience, and I remember, 2 or 3 people having to get him out of bed or having to bathe him, and it's a huge undertaking, a huge process, and people just don't think about what that looks like. It's easy to say my family will take care of me, but will they really be able to, even if they have the time and the means?
It's funny you should say that, because that's one of the things that I have seen. The kids will take care of me. Well, the other thing that happens is the kids get older too. I was talking to one client who was 86 years old. The kids will take. How old are your kids? Oh, they're 64,
right.
67. Right. It's like, oh yeah, they're going to go far.
Right, picking you up off the floor is probably just as hard for them, right?
Right. So,
right.
What about this?
To say nothing of the fact of the the intimate situations you'll be put in. Does your kid really want to bathe you daily? It's it's a lot. So yeah, the other thing is, I won't get sick, and I attributed this quote to every person I talk to all the time ever, because we all want to bet on ourselves, right? We all, think that nothing can ever happen to us, and we're invincible. But the facts are there. You mentioned 70% of people will need care, so that means 30% won't. So if you're in a couple, and a 30% chance on a 30% chance is a 9%. So if the chance of neither spouse needing care in a couple is 9%. So, do you really want to, roll the dice on those odds?
Yep. Okay. So, talk to us about traditional long-term care insurance first. Let's get into that.
Sure. I mean, I think traditional long-term care insurance it was the original type of insurance that was out there, and it'll always have its place. It does have its shortcomings, which we'll get to in a second, but it is, private insurance that helps cover the costs associated with long-term care. Benefits paid are income tax-free, and some states even have deductions on the premium, so you can consider the premiums tax deductible, which is definitely a good benefit. But it does have its shortcomings. We'll talk about those here. I don't know if you wanted to cover this one, Jim, or you wanted me to. But
I think it's kind of. I mean, we've seen this. I've been around long enough now to see that, like, early policies, second, third, fourth generation, ways of covering this. And like the comment I hear from everybody is it's expensive, and it costs a lot of money to do this. And I guess the traditional long-term care policy is kind of like fire insurance, right? You pay a premium. If you have a fire, that was a great idea, and you cover yourself. And if you don't use it with long-term care insurance under the traditional method, then you spent all that money essentially protecting yourself, but had no need to protect yourself. You essentially threw it all away in that condition. Another thing that we see is, can I qualify to get it? I've had some health issues. What does it take for me to get it? Maybe I can't get it at all. Certainly, the one thing that we've seen in the marketplace, and I can relate to my own family situation, about a policy from AARP, good company supporting it. But the bottom line is, no matter who you buy it from and what the company was, premiums have gone up. And that's just the state of the world that we're in costs of medical care. And one of the things, again, I'll come back to is you kind of have to, if you don't use it, you lose the premium. So I know there's some alternatives out there, Joe. Why don't you pick up on some of those?
Yeah, so I mean, the asset-based solutions that I'm going to talk about, through my company, we sell about 3 to 1 of these versus standalone long-term care. And my company, just to give you a tiny bit of background, we're a brokerage general agency, so we can wholesale any product from any company essentially. So we have access to all the traditional products and all the hybrid or linked benefit products, and we sell much more of these linked benefits because they answer those concerns of traditional long-term care. So, if care is needed, they pay out benefits in the same way a standalone long-term care policy does. But the advantage of it is, if the care is never needed, it answers that use it or lose it, objection, which is there's going to be a tax-free death benefit that goes to your named beneficiary to make sure that, someone got more out of the policy than was put into the policy premium-wise.
So
Um,
let me just
so
let me expand on that just one second, Joe, so there's some clarity. Asset base means that there's an asset there. You're putting your money into something, a policy in this case, that's creating an asset. That means you have some cash value or some investment value. Is that right?
yeah, absolutely. Yep.
That's an
There's leverage there no matter what.
Right. So and the other way to look at it, the older policy was you just pay as you go. You got no value out of it, right?
Correct. It was an expense, not an asset. Exactly.
Exactly. Okay. So in this particular case, you're actually creating an asset. So this is an asset that would show up on your net worth statement, your balance sheet. It's actually something that you could look to as part of your net worth, right?
Correct. Yep.
Okay.
Exactly.
So tell us what these products can do and what form they come in.
Yeah, so there's actually life insurance chassis and annuity chassis products. Either way, you're going to get those tax-free long-term care benefits. An annuity is a product that grows the cash value and will pay out. So if you want to surrender it while you're alive, you can do that, but you'll also have the long-term care leverage, and then a life insurance chassis will have death benefit leverage that you can use for long-term care. So you can basically accelerate your death benefit for a long-term care need. It's a more efficient way to self-insure. If you ask someone what they like about self-insuring, well, I get to maintain control of the asset. Well, here you do as well. The asset is liquid to you as if it's sitting in your bank account, or at least, a portion of it is. However, you're also leveraging it for, 5 to 1, 10 to 1 on the long-term care side. It's protecting the rest of the assets that you have, right? It's an asset that protects the rest of your assets. So you don't have to, liquidate, the house to pay for your care, or the second home that you were planning on leaving to your kids, or whatever those less liquid assets you need to draw from. Because the real question is, if you run into a care situation, we saw the numbers, is which $500,000 are you going to liquidate first if you don't have insurance? And that's something everyone needs to think about.
Okay.
Great. So you mentioned there's asset protection in here. Is that protecting the house? Is that what you mean?
Well, it's, if you have insurance, you don't have to worry about which assets you're going to liquidate first, like your house, yes, which you would need to pay for your care.
So let me just kind of just give an example of what I've seen here is, and we can look at some of these other benefits. So I've got an old life insurance policy or an annuity in my name, or a CD, or doing something at 2% at the bank, or not even if I'm lucky. You're telling me I can take some of those dollars and put it inside a policy here. And when I put it in the side of the policy, I'm going to move money from one account to another account, one cash account into another cash account, and I'm going to use it for a couple different things if I needed to. If I have long-term care, I'm covered. I get my long-term care paid for. If I don't need long-term care and I die, which we will one day, then I will have some sort of death benefit protection. Is that right?
Correct. On a life insurance chassis, that's correct. Exactly.
So I will get essentially a return of my premium or some sort of benefit going down to my heirs and my family, or make up for the costs I spent on long-term care.
Correct.
That's pretty neat. And then, let's say I need to get out of the thing. Let's say I'm done with it. I'm good to go. I just want to get my cash out of it. Is that possible?
Yeah, it is. So there's always going to be at least a portion of your cash available to you. Most products are built on a 100% return of premium chassis that can be modified down to, our best-selling hybrid product. You can do 80% return of premium, meaning 80% of what you put in is liquid to you if you want to get more long-term care leverage. So there is the option to have less than you put in available to you for more leverage, but if, there's always those people that, they like the safety of being able to call back, all of their money at any time, and you'll always be able to do that if you set it up correctly with a linked benefit product.
The other thing on this slide that I wanted to just touch on here is there are some products out there, some features that are guaranteed. So you don't have this, premium creep or cost going up each year. Can you explain that a little bit?
Yeah. So I mean, it's just what it says. The premiums are guaranteed. So these policies, might look expensive on the surface, but when you think about, the peace of mind of, 20 years from now when you're retired and not working anymore and you can't afford for the premiums to go up, you'll either be already completely paid up or you're guaranteed that your premiums that you're currently paying won't go up, which is a huge thing for people that, are one day going to be on a fixed income in retirement.
That's great. So I know it's we've got to skip ahead here, but it's a little bit easier to get into this product than most people might think. But when you look at wrapping this thing up, it's long-term care is not only a life-changing event, but it also has a significant impact on the family. And long-term care planning, how you want to pay for it's up to you. If you want to self-fund, rely on the government, rely on your assets, look at traditional product, look at these new linked benefit products, then you should take advantage of looking at your retirement plan holistically. Long-term care is a liability to yourself and your family. You should look at the options in terms of how you want to fund it. At the end of the day, it's all a personal choice.
Okay. Thanks, guys. Thanks, Joe, for helping us today. We're running a little bit over time, but you did a great job. Thanks for helping out. Glad you could join us.
Thanks for having me.
So we covered a lot of ground, and let's just summarize. It's time to put this information to work. We live in a wonderful and a free country, but it's up to us to take responsibility and move forward, particularly on our personal financial wellness. So let's take some action here. Let's go and explore this financial stuff. Take a buddy with you if you need to. Have some fun. Learn a little or learn a lot about what you can do financially. These videos and websites, I hope you enjoy. I think they're great. But if you're like me, sometimes you just want someone to talk it out with. So seek out coaching from our site from professionals who have been vetted to provide you with complimentary initial consultations as being part of the Go Plan 101 experience. If you've not started your planning, or even if you have, use today's video to explore the area of concentration. Make sure you understand how it impacts you. My favorite quote is, life doesn't go in a straight line. You need to stay on top of it. So consider subscribing to our newsletter or our YouTube channel. Please reach out to me if you want more help or have questions. And lastly, thank you for listening. Now, go plan and go attain your financial wellness goals. Jim Hiles signing off for today. Take care.